firstly, I want to say welcome back to the Vertex Investing YouTube channel. And as I said in the last video, it has been a long time. But hopefully this video will be useful. So in this video, also actually before I say that, I just want to say obviously thank you again for the continued support of Vertex. I think the growth has been incredible. Yeah, and I'll always be grateful for that. And also, thank you for letting me know about the content that's in Telegram. Because although I've not been active on YouTube, the content on Telegram has been flowing. To be fair, I think the last 2 weeks have been pretty quiet, but but yeah, I try to keep up with it as much as I can. So thank you for that anyway. So in this video, we're going to talk about this post that I did last night. Last night for us in the UK. So understanding this, and I thought doing a video explanation would be better as well. But understanding these two screenshots will give you a better ability to anticipate moves, right? So let's start off with the pro trend situation, okay? Now, what we're trying to understand here is choosing your POIs, okay? Because the thing is, when you get situations like this, for example, when you get the break of the range, the thing is, this is therefore a valid OB. But at this point, you need to decide whether this OB has enough confluence behind it compared to the one that is below that previously mitigated something else, okay? So in terms of your OBs, you need to create your own rules in order to find, what fits your trading model, okay? And I think I did it in a post, I can't remember which one it was. It was this one, I think. Yeah. So this is when we're going to start thinking about the questions that you're being asked, the question you should be asking yourself, right? So when you have the situation, okay, let's start with pro trend, as I said. When you have the situation here, when you have the break of structure, you need to ask yourself, does it make sense to trade from here? Because apart from that being an OB, it doesn't really make sense. And in terms of the full range, you're not trading from discount. So it doesn't make too much sense to trade from there. It's more higher risk. Obviously, you can do whatever you need to in order to confirm it to increase your probability as we do, but it doesn't hold much value because you know where order flow is being maintained, and for order flow to be maintained, you need to follow the mitigation, and this is basically the direct example for that. Now, the pro trend and counter trend situation doesn't differ too much. The only thing is the counter trend situation. Understanding when order flow is fractured will give you that ability to anticipate moves before they happen, right? And it is as simple as seeing it as it's as simple as seeing it as a break of structure and a return to an OB. Okay, it's as simple as that. But you still need to have the understanding behind why it's happening, because although we broke structure, the intent itself doesn't mean anything unless you get support of unless you get support of the move, which is due to the mitigation play. Okay, as you can tell, I haven't actually scripted this video, so I'm trying to make it as flowy as possible, but I'm clearly not doing a good job anyway. Anyway. But when you get the break, the mitigation and the change and the transition of order flow is only confirmed when you have the other mitigation. So your optimal entry is coming off this mitigation that mitigated the first OB. Okay. However, this is still a valid entry point. If you wanted to trade it, you can. But you just need to understand the probability is a lot lower. However, there are ways to increase the probability, as we know, but in order to improve your win rate, you need to think where the highest probability setups are, right? So let's talk about this scenario here. So I should have got this ready before I did the video. When was it? It was yesterday, so it was the 3rd. It was, oh, I think I'm on it. Yeah. So let's talk about this scenario here, right? So let's go from here. And the reason why I thought this scenario was a good one to use is purely because although it is counter trend on this temporary trend, right? It also shows you the pro trend perspective. As I said, there's not much difference. The only difference is the initiation. Okay, the initial part of the transition is the only different part. Apart from that, everything else is the same. So what we can see here is we have the breaker structure. Okay, because we have the low, we have the solidified low, which is here, and then that was the high that created the low. I don't know if that's going to be clear for you guys. Let me make that darker. There we go. Okay, and then what we have this high that's been created. Now in this point, what this is telling you is this is your intent. Now this is your intent for order flow transition as well as bullish order as well as bullish intent. So what that means is, because as you can see, price is obviously nicely flowing. You do have mitigation play to the downside, and this is a very good example of the way I sort of see it is when you have too many mitigations, it doesn't make sense. That's weak order flow. So for me, you know, I don't trust the bearish order flow in that sense. However, that's a bit more subjective. It's very hard to be rule based about that because there's no set rules as to how many order flows you have before a release, right? We won't know that. There's no strict ruling about that. Well, that I've not found any strict rule from my testing. Generally 2 or 3 mitigations and then you have a full release, then the same thing happens again. It's the same cycle. But again, don't quote me on that because there's no definitive number for that. Anyway, so as I said, is when you have too many mitigations in one go, the order flow is weak. So for me, I didn't trust looking for shorts. Okay, now for me, this hasn't London Open hasn't even happened yet, so I wasn't too interested in this move anyway. But this confirmed that order flow is weak, this move. So I had more confidence to look at looking for longs. However, I'm not going to refine the POI and then just trade. I'm not going to look for a POI, right? And I'm not going to just trade straight off that. Why? Because it's stupid. It doesn't make sense. There's no real logic behind it because all I have is intent. So therefore, in my head, this is gambling. Because you're guessing. So what we had was a refined POI here. And I'm not going to go to the seconds time frame now because I'll just mess up the layout. Let me break this. Okay, so this is what I mean in terms of the confirmation. Order flow transition is confirmed when we have this break. Okay, because now what we now have let me get rid of that. We now have this high. Okay, and we have this low. The reason why I'm saying this is a low because from here it pushed up, but it failed to create new high. The new high was created from this leg here. So for me, the range I'm looking for is from here to here. Now this therefore becomes your trading range, and this is your valid trading range. Now the probability from trading from this POI here is high enough. Now I don't know what the range was of this POI. Where is it? Yeah, so you could have had a 2 pip stop if you were going to use the open anyway, or if you're going to use the 50%, then you could have had a 1 pip stop on this one. Now why is this a valid entry to trade directly off it? Okay, and bear in mind we're on the 1 minute time frame at this point, and this is a very rare situation. I don't normally scalp or trade like this, but I had nothing better to do, to be fair. So in this situation, what can you do? So you can trade straight off this because you have the confluence. You have the confluence of the fact that you have the bullish intent. Okay, So we had the transition of order flow following this break, and that transition of order flow was confirmed by this breaker structure. So in terms of our POI selection, what do we have? We have a clear POI, okay, here, and we have the mitigation play, and this wick, this candle was mitigated by this wick, so therefore we have the invalidation point here. Now this invalidation point is somewhat aggressive. The reason why it's aggressive because it's not clear what is mitigating. However, this is a clear mitigation because that's mitigating the 1 minute or the whatever I think it was the 15-second POI within that wick. That's mitigated that, okay? So that we can confirm. So that's your conservative invalidation. Now, why is that important? So if you were going to trade straight from here, right? If you want to be conservative, your stop loss should be below. Now, I usually use whole numbers because I don't like working the lot sizes out for point numbers. Doesn't make it's more confusing for me. So if you want to be conservative, your stop loss will be below this low. That's the true invalidation. But if you want to be aggressive, then your stop loss will be fine below this low, and you can have a 2-pip stop and still be comfortable. Purely because the spread on Euro USD, we all know it's very tight, so you should be okay. And your initial target will be the highest created, so it'll be about here. Okay. Now again, bear in mind the time frame you're on. So I don't know what you would expect in terms of risk to reward, but I know nowadays people are expecting to hit 1 to 10s within minutes or so, and it's possible, but you still need to be realistic with your targets, and your targets need to make sense. Anyway, in terms of the way that this was traded, hold on a sec. This is the bit I need to talk about actually. So what we have here now, we created this high that's broken this range. Now, what this means is we have a valid POI, which was this candle here, right? The reason why it was this candle here is purely because that's the one that created the move that broke the high. All of these moves failed, okay? Price is reluctant to go higher, okay, until we reach this point. Now, when you get to this point, you need to think, does it make sense to trade from here? Now, in my mind, this is a natural instinct for me to say, no, that's not valid, but it's still a POI, it's still an OB to trade from. But the reason why it's not high probability is purely because he hasn't really done anything apart from leading to the breaker structure. And you need to ask yourself, what does it need to do to maintain order flow? Now, order flow will be maintained, right, when you follow the mitigations, and that's exactly what I mean by following the mitigations. So I didn't even look at that POI, so that was cancelled. Okay, so now that we enter the POI, so as I said, you could have traded straight off this OB. You could have traded with a 2-pip stop, and your initial target is going to be this high. But let me find, our entry was a little bit different, as you can see here. So I don't know what that was. Anyway, so as you can see, we entered somewhere along here. Now, the reason that we entered here is purely because we have a confirmation model for our lower time frame entries to increase our win rate even further. Not only that, it also allows us to be break even within minutes, even within less than a minute at times. So that's the reason why our entry is a little bit higher up. So, oh God. So in terms of entry wise, in terms of how it looks, yes, it doesn't look too great on this time frame, but it made sense, and we had the lower time frame invalidation and the lower time frame order flow to give us that entry point. And not only that, it also helped confirm whether we are correct or not in terms of our bias. But trading from this POI in itself is valid enough. Okay, so you should have enough confidence to trade off here, and this is more than enough to use for any time frame. Now, as I said, although this is the 1 minute time frame, you can use the same exact model on any time frame that you are trading from, right? It's as simple as that. As simple as understanding where the mitigations are, and then you know where you can safely place your stop loss. Now, in terms of targets, your targets are either going to be potential POIs, or they're going to be liquidity points. Now, liquidity points are your highs, right? Highs or lows. In this situation, it's going to be highs, so There's liquidity above this high, liquidity here, right? So in that situation, we're going to be targeting our liquidity points, because although we do have a valid potential POI here that we could potentially had a short from, but it didn't really make too much sense. It didn't really do anything. So for us, the only target we had, the only reasonable target we had was this high initially to take any partials from. So that is following the mitigations. Now, you can use the same concept of following the mitigation and the order flow transition when you're looking to exit. Now, the interesting part, I can't remember where it was. Yeah, here. So what we have is we have this high that's being created, right? And we have this low, which eventually got broken by here. The thing is, when you get this, we have the same situation as we had here. Okay, this is your intent, but this intent was not confirmed because the POI that should have been respected, if order flow was going to change, was violated, and then price therefore continued. So now this is now considered a liquidity grab, right? So all it takes is a little bit of patience to help you determine whether whether you're going to follow the intent or not. The intent alone won't give you a high probability. Now, in terms of a true exit point, and this is when I exited the trade. Let me find it. Nope, not yet. I think it was here. Yeah. So what we had here. Okay, so I saw a break of, we have the high, solidified high, solidified low, which then was broken. So here we have in the same situation again. We have our intent. And the only way that we are going to follow if order flow is transitioning is if this POI was mitigated or respected, or however you want to see it. And then what happened was price came, and then as soon as we broke this structure, that was a confirmation for me that I need to get out the trade, because order flow is now switching, and that is exactly what happened in the end. So order flow switched, and then what we can see is we have bearish mitigations. As you can see here, you have break a structure, mitigation, continue, and then break a structure, mitigation, continue. You can see the transition in order flow. So it was the right thing to do. And again, this is the same model you use on any time frame. So you can do this on your higher time frames to catch the bigger moves. The system is exactly the same. And that was what this post was all about. So hopefully this video has given you, as I said, probably not the best visual representation. I have to admit, I probably should script these videos because I sound like I'm waffling and making stuff up. But I hope it was clear enough to explain the logic behind it, and hope it didn't waste too much of your time. But for now, I hope this video was useful. And again, if you haven't joined this Telegram group, make sure you do. A lot of people have been asking about where the playbooks are. When you join the Telegram group, if you just click the tabbed, the pinned message, our playbook, there's one here, there's another one somewhere. There it is. The other one is here. So you could download both of them. They're both free, obviously, for you guys to use. And as I said, they contain the most basic knowledge. And what I would say is go through all our, because if you're new, go through all our Does It Make Sense posts. There's plenty of content to go through. This is more than enough to give you consistency. All it takes is a little bit of time and effort and backtesting to try it out. I mean, you don't need, obviously I'm here for the mentorship if you want it. I mean, you can join, feel free, but this is more than enough to give you insight as to how we trade. The only thing obviously I don't teach for free on YouTube is our entry method, because I think with our confirmation model, I've not seen anyone else do it. It's unique to me, so it's something that I'll keep within the mentorship. And the main thing with the mentorship is the fact that it's my time, it's my private time that I'm giving you guys. You invest in me, I invest in you. That's how it works. But also, actually, I will mention that we do have our September bootcamp if you wanted to join. there is a discount code somewhere. I'll put that discount code for the boot camp in the description. I don't know it off the top of my head, to be fair. So I'll add that in the bottom. But for now, I hope you guys take care and trade safe.